Good day, everyone. My name is Tabiso from Vinju Wealth. You can always get a hold of me by visiting our website. It's vinjuwealth.co.za. Always free and more than welcome to drop an email into info@vinjuwealth.co.za. You can always find more content on our Vinju YouTube channel, Vinju Wealth YouTube channel. I'm also available on Facebook, Instagram, LinkedIn, and Twitter. The last video that we did, we left off at number 5. So now we are continuing with the subject of understanding the financial markets. Never attach emotions when trading the financial markets, because the market will never care whether you are angry or you are happy. It does not care about you are feeling sad or you are feeling or grumpy or whatsoever or howsoever you are feeling. Never attach emotions when trading, because a lot of people tend to lose a lot of money because of their emotions attachment when it comes to trading. You find people closing out a losing position because of fear to lose more. That is emotions, or those are emotions attached. Why are emotions attached? Because these people do not know what they are doing. Only emotions get attached unto those who do not know what they are doing when they're trading. Because if you actually know and you are sure of the position that you have taken, and you know that the outcome will be like this, why would you panic? And why would you be very much full of emotions? There is no way, because you know that this position is going to turn out like this. So you tend not to invest emotions when you take your positions, because now you have come into a certain level of understanding risk. Because you know what, emotions, a lot of people who get these emotions or who use emotions when they trade are those people who do not understand what risk management is. Because once you get to understand what risk management is, it's quite easier for you to take position at certain levels, knowing that your risk reward is this, or this is how it will be, your risk reward ratio. Risk management is very much important, and there are always ways of riskless trading. Always. If you don't believe me, tell me, how do banks make their money? How do these large institutions make their money? How do these big retail traders make their money? How, if there were no ways of riskless trading? And if you are interested in finding out more of these riskless trading strategies, I do have more of them. Just get in touch with me. Go to my website, vinjuwealth.co.za. Go to learn how to trade and invest the financial markets. Leave your details there, and me and you will get in touch from there. A lot of times people ask me that, what is risk? I don't understand this term risk, how to manage it. According to me, this is my definition. Risk is a function of height. Risk is a function of height, because you see, the more you go up is the more riskier anything gets. The more higher you go, geography says, the colder it becomes. So the more higher you go in the financial markets, the more riskier it becomes when we are buying. When you are selling, the higher you go is much more lesser it becomes riskier for you, because you are a seller. But the lower it goes is the more riskier it becomes for you. So this is risk management, knowing when to enter, when to exit, and how to calculate your risks. If a market dips, how many points does it dip with? If it climbs, how many? It is understanding the psychology of the market. I personally do not believe that the market does not know where it's gonna go next. I do not believe this, because a lot of people and a lot of traders I've heard, they kind of say that the market just moves. There is nobody controlling the market, and they don't know which direction the market will take. I tend to disagree with them, because if you have done your thorough chart analysis, your technicals, and then you put them and you link them together with your fundamentals, there is no way you will never know where the market is going. And based on the price levels, the strike zones, the supports and the resistance levels, how the market is structured at that particular time, and what are the fundamentals saying, there is no way you will never know where the market is going. Those people who usually say that are those people, I think, who are lazy to do their research. But as for me, I always predict, and I always know it's not about prediction, it's about knowledge. It's about the investment of this education. A market always moves for a reason. Always know that. Do not focus on the move, but always focus on the reason, because the reason will always lead you to the move every time. Never focus on the move, focus on the reason. This is this thing that I just highlighted just now, that you need to focus on the technicals, but not on the technicals only, but also on the fundamentals. The fundamentals, this is the news that makes the prices to move, that pushes the market to move, that drives in a lot of buyers, that drives in a lot of sellers. News is very important, because news is the reason behind price action. News is the reason behind the prices. So never focus on the movement, focus on the reason, because if you know that there's going to be a very big news break, maybe about maybe for the Facebook stock, there's going to be a news break, and price have been stalling in the market, there have not been that much of a movement, and then there's going to be a news break, a news announcement, a very great one, and you know that if that news announcement is positive, that will be a much more greater boost for the prices to continue moving up. It will be a great support. But if ever the news come out and they're negative, just know that that will push a lot of sellers into the game, that to sell the stock. So the reason is the news, and then the movement is what the outcome of the news is. Traders, we trade the price in the market. That is what we are chasing. We trade the price. That is all we are trading. As traders, we are always looking for discounted prices for different assets, to buy low and to sell high. That is buying weakness, buying when an asset is on a discounted price, buying low and selling it when it gets higher, and we make that difference. And then when you are a bear, if you are a seller of the market, you sell strength and then you buy weakness. You sell strength, then you buy weakness. As traders, we are always scouting for different prices that are much more lesser, so that we can buy them. That's how trading is, and we are doing this thing over and over again. We buy low, sell high. If you are a seller, you sell high, and then you sell high, and then you buy low. Simple like that. News is what affects price. Always know from this day that news is the only reason behind price action. For example, when good news has been announced in the market, they provide a floor beneath the market to help support prices to continue climbing. People ask that what makes price, or what causes prices to climb, or what causes prices to go up. The reason why is because of the news. See, investors are always looking for something stable, something tangible to give reference to. They want a reason for their position. That is why I have told you that you need to know what you are doing, why you are doing it, and when is the right time to do it. So they already know that when there is a news announcement concerning a certain asset that they want to buy, they already know that that news is going to be the reason why they have to buy that position, or they have to get into that position. So this is very much important, because it creates a support beneath the prices, or it creates a floor for prices to continue climbing. And the very same thing, or the very same way, when bad news is being announced, a lot of short-term traders and a number of investors lock their profits because they will be thinking that bad or how bad the news have impacted the stock and what the outcome will be as far as the price is concerned, and then they will lock out their profits, and then they will want to stay on the sideline and watching how deep the impact is on the price. And then when there are no more, or when there is no more money, and when there are no more buyers in the market, what happens? The market collapses. The reason why the market falls is because traders and investors have taken profit at a certain point. That is leaving the market onto a free fall, leaving it vulnerable to sellers. I'm sure this is much helpful. Subscribe on our YouTube channel, like this video, and do not forget to visit our website, that is vinjuworld.co.za. See you on our next video.